Good morning, everyone. It feels more. I feel more comfortable since this is my second visit, and I think we can have a very in learning. We can learn something together at a very informal pace and setting. The topics that I've been entrusted with is the Sikkim Financial Rules, the plan and non-plan merger, and the Sikkim Travelling Allowance Amendment Rules 2016. While the Sikkim Financial Rules 1979 would be quite exhaustive to finish in a single day, let alone a single session, I'll try to do whatever justice I can and answer your queries or reservations or anything at all that I can help you with. I've done a little bit of preparation on the plan and non-plan merger as well as the Sikkim Travelling Allowance Rules on which we can start. Firstly, the plan and non-plan merger. As you know, with the coming of age of the Niti Aayog, the Planning Commission was abolished and the segregation on distinction between the plan and non-plan expenditure was done away with. The basic rationale for the plan and non-plan expenditure has its roots in the plan budgets since the inception of the budgetary practices here in India. Since 1951, we've been following the 5-year plans. This is actually a copy of what the Soviet Union was doing. The Soviet Union was always having the 5-year plans, and India, since it was a economy that stressed socio-economic democracy, we tended to copy the Soviet Union. So, I mean, the plan was basically to have 5-year plans where you incorporate the weaknesses of the economy and where you make capital expenditures accordingly, build capacity of the economy, and so on and so forth. And this practice was continued till 2016. 2016-17 was the last year of the planned budget. The last planned budget 5-year plan was the 12th 5-year plan, which ended in 2016 and 17. The reason for actually stopping the 5-year plans was the recommendations made by the C. Rangarajan committee. As you may be aware, Sri C. Rangarajan was the chief economic advisor to the Prime Minister's Council, and prior to this, he's had a lot of. He's basically an economist who's had various roles with the economy. He's been a deputy governor to RBI under Manmohan Singh during the 80s. He was the governor of the Reserve Bank of India from 1997 to 2002, and with his experience and with his knowledge, the committee on reforms actually recommended that one of the reasons for the shortcomings of the annual plans was the very institution of the Planning Commission. What it said was, so the recommendations given by the C. Rangarajan committee in 2011 was, it recommended that the Planning Commission be dismantled because the old classification of the government expenditure was not in sync with the realities of the economy, with the liberalization taking place and with the fast-paced developments, maybe the 5-year strategy was not the way to go about it. The earlier distinction of planned expenditure was taken after the government made discussions with the Planning Commission. So basically, Planning Commission was a very, very strong institute. I remember times when Monte Ahluwalia was the chairman of the Planning Commission, that he was for all purposes the figurehead that you would usually see on news articles, the news pages. He was basically a very, very important person. And maybe it wielded, the Planning Commission wielded powers incommensurate with the duties it was actually entrusted to perform. It was actually even difficult for the finance department to actually plan expenditures without the concurrence of the Planning Commission. Basically, if the finance department was entrusted with the Finance Regulation and Budgetary Management Act, but then it was actually the Planning Commission that held all the trump cards. In the earlier system, more importance was laid on planned expenditure. The newly adopted system of classification now emphasizes on expenditures of the government. The new classification of expenditure on revenue and expenditure is such that the capital expenditure would include the loans given to the state governments, loans given to public enterprises, loans given to foreign governments, and acquisition of valuables. Whereas the revenue expenditures would inculcate the pensions, our wages, our salaries, interest payments. So basically, what was happening was the Planning Commission, when they made the 5-year plans, they were creating assets. Every 5-year plan, you had a different sort of emphasis, whether it is the infrastructure building towards roads or socio-economic performances. But after the capital expenditure was being made and then the next plan started, what was happening was the earlier plans were being neglected because the maintenance of the earlier assets became a non-planned expenditure. For the government, it was always we get more funds under the plan, so we focus on new schemes. But the old schemes, since it is being neglected, it is something, you have something new, you start something again. And I think this distinction between capital and revenue expenditure makes more sense. It makes more sense financially, and I think that is one of the reasons that the government has adopted the recommendations of the C. Rangarajan committee, and we have also, it's been about 7-8 years, so I think we have also adopted as well as adapted to the system. Is there any questions that anyone has on the planned and non-planned expenditure? Any difficulties that arises as such? Or is it not relevant to what we are entrusted with, the day-to-day workings of the office? Okay, so we can move on to the next topic then. The next topic that's being given is the Sikkim Travelling Allowance Amendment Rules. How familiar are we with the Travelling Allowance Rules? The topic is actually the Sikkim Travelling Allowance Amendment Rules 2016. But I think just reading out the amendment rules would actually not explain much if we do not go into the details of the travelling allowance proper. So let me try to do justice to the topic. Okay, so the Sikkim Travelling Allowance Rules 1980. We'll start with the definitions, where these rules are called the Sikkim Travelling Allowance. The extent of application, it's applicable to all government employees, all of us, whether it is the class 1, 2, 3, 4, 5 employees. It's even for the officers on deputation to the state of Sikkim, and it is applicable to the All India service officers who are posted here in Sikkim, unless expressed otherwise in their in the travelling allowance rules, All India service travelling allowance rules. Okay, so there are the usual definitions, such as camp equipments. Camp equipments would be the tents, the requisites that is required. So camp equipment is basically whatever is required for travelling purposes, whatever camp furniture, camp tents. The competent authority would be the government or any authority that the government has delegated the powers to. The controlling authority would be the controlling officer, without whose permission such approvals, such undertaking such tours would not be possible. Family of the government servant would be the immediate family of the government. The government servants, such as the husband, wife, as the case may be, residing with the government, and legitimate children, stepchildren residing with and wholly dependent on the government servant. It would also include parents, unmarried sisters, and minor brothers who are dependent on the government servant. Hill station would mean the hill station. Pay would be the pay of the government servant. Public conveyance, as you know, would be the train, steamer, or any other conveyance. Transfer would be movement on government order. Travelling allowance, the term travelling allowance is a compensatory allowance granted to a government servant to cover the expenses incurred in travelling or in the interest of, in public interest. For the removal of doubt, if there is any doubts, such as, any sort of a situation which cannot be interpreted within the framework of the rules given to us, the authority for removal of doubts is the finance department. So anything that we cannot understand, we can always send forward the files to the finance department for removal of doubt. And repeal would be all other rules of travelling allowances have been repealed after the after the establishment of the Sikkim Travelling Allowance Rules 1980. So basically now, with the coming with the new pay structure being exacted, there are different grades, such as grade 1, grade 2, 3, 4 and 5, and the pay matrix, corresponding pay matrix is 20 and above for level 1, 19 for level 2, 15 and 18 for level 3, 10 to 14 for level 4, and 9 and below would be level 5. So it's according to these levels that the allowances are admissible, the daily allowances are admissible, your lump sum packing allowance, your travel grants, everything is actually as per the levels established. The permanent travelling allowance is something that is granted by the government to any government servant whose duty ordinarily requires regular transportation. Travelling allowance for journeys within the government servant's sphere of duty and is drawn all year round. The government servant who are granted conveyance allowance under these rules shall not be entitled to any other travelling allowance, that is daily allowance or mileage allowance, for journeys up to 16 kilometers from the usual place of work at the headquarters. For journeys beyond 16 kilometers performed otherwise, this in his own conveyance, travelling allowance, daily allowance, mileage allowance as admissible under the rules may be drawn in full. A mileage allowance is an allowance calculated at the distance at which is given to meet the cost of the particular journey. Where there is more than one route, it's usually the shortest route or the actual route taken. I mean, the whichever costs less to the government would be the mileage allowance that is admissible. If a government servant travels by a route which is not the shortest route but is the cheaper than the shortest, his mileage allowance should be calculated on the route actually used. Government may, for special reasons which should be recorded, permit mileage allowance to be calculated on a route other than the shortest route, provided that the journey is actually performed by such a route. So basically the reason for the detour would actually have to be understood and accepted by the accepting authorities. That would be the controlling officer as well as the approving authority. Now again, the mileage allowance for travelling by train would be for level 1s, it is AC 1 tire. For level 2, it is AC 2 tire. For level 3, it's AC 3 tire. For the level 4 officials, it's AC 3 and AC chair car. And for the level 5 officials, it is AC 3 and chair car as well. Government servants of all grades are entitled to reimbursement of reservation charges of the seat and sleeper in addition to the entitled class of fare. When an official journey by train is cancelled in public interest, the cancellation charges is also reimbursable by the office, but such a charge would be should be justified and accepted by the controlling officer. Except in cases of journey where the mileage allowance is admissible to the government in respect of a journey by rail, a single fare of the class of accommodation actually entitled plus daily allowance would be admissible. For the journey by road, within Sikkim, a government servant shall be entitled to the actual motor fares at the rates prescribed by the SNT or the Sikkim Transport Authority, if no government vehicle is provided. Government servants of the next rule says that the government servant is entitled to a mileage allowance of rupees 5 per kilometer if the journey is performed on foot beyond a radius of 8 kilometers to the headquarters, subject to a maximum of 30 kilometers per day. I have actually not encountered this rule during 15 years of my service. I don't think anybody claims walking allowances anymore. Anyways, so it is there, 5 rupees per kilometer, subject to a maximum of 30 kilometers. So by the time you earn 150 rupees, I think you're going to be exhausted. When the journey is performed by non-vehicular roads in areas up to 8,000 feet, the admissible allowance under Rule 19 would be allowed reimbursement, and the cost of carriage would be given. There's the level 1 and 2 officers are given 3 coolies, level 3 officers are given 2 coolies, and level 4 and 5 officials are given 1 coolie. Journey by non-vehicular road, Rule 21 says the admissible charges for riding yak, riding mule, pony, pack yak, pack mule, all this is given. And then journey outside Sikkim, again For journeys outside Sikkim, the rate of mileage shall be as follows. For level 1, 2 and 3 officials, entitlements would be by public luxury AC plus or by full taxi. It's the actual fare or at the rate of 16 rupees per kilometer. For officials below 4,600 and below, it's public bus or auto rickshaw or the actual fare at the rate of rupees 8 per kilometer. The government servant on official tour to New Delhi, Calcutta, who uses transportation facilities provided by the Sikkim House, STCS, or the Tourism Department, Government of Sikkim, New Delhi or Calcutta, shall be entitled to reimbursement of higher charges of the transportation actually paid, notwithstanding the rates prescribed above. So I think it is advisable to actually employ the services of the Sikkim House or the Tourism Department or STCS, because the rules say that whatever charges that accrue, the entire amount is admissible. Hiring of vehicle for the full day or on hourly basis shall be admissible only to officers as per the entitlement. So the entitlement would be the officers of the rank of Joint Secretary and above. For the purpose of these rules, travel by air means journey performed in the machine or public air transport companies. It does not include journeys performed by private aeroplanes. So it's only public transport with the exception of the STDC that has the helicopter services from Gangtok to Bagdogra. So basically any person who's entitled to fly, that is Joint Secretaries and above, are actually entitled to use the services of the helicopter as well. When a journey of the government servant is cancelled solely owing to an official reason, the deductions made by the air transport company due to the cancellation of tickets shall be reimbursed to him. If the claim for reimbursement is made to the government in the manner previous. So basically any cancellation beyond the control of the official and for official reasons would be reimbursable by the government. A government servant authorized to travel by air on tour is entitled to mileage allowance equal to the standard airfare for the journey, in addition to the daily allowance for the entire absence from the headquarters, starting from the and ending with the arrival at the headquarters, to cover on the way expenses as well as expenses for the halt at the outstation. It is the Chief Secretary who is authorized to approve air travel for non-entitled officers. A government servant who is not authorized to travel by air but who performs a journey by air on tour can draw allowances that is admissible as per the entitlement given to him. If he is entitled to travel by rail by a certain class, the same amount of funds can be reimbursed if he has flown. Now the daily allowance, there is again with the new pay structure, the daily allowances are also according to the levels. For within the daily allowance within Sikkim, for level 1 it is 300 rupees, for level 2 it's 250 rupees, for level 3 it's 200 rupees, for level 4 it's 175 rupees, and for level 5 it is 150 rupees. For tours above 8,000 feet, the same daily allowances would again be given at the enhanced rate of 50%. When a government servant stays in a hotel, the admissible daily allowance within Sikkim shall be the DA inclusive of hotel accommodation would be 800 for level 1 officials, 700 for level 2 officials, 650 for level 3 officials, 500 for level 4 officials, and 400 for level 5 officials. There is an exception to this rule where if the official stays within the PWD, RDD, forest, state guest houses, the reimbursements shall again be made to the extent of the actual charges paid in addition to the full daily allowance. This is sort of a corollary to the earlier rule where it was established that any means of transportation given by the Sikkim House, the STDC or the tourism department would be reimbursed to the full extent. This is because the rationale for this would be basically the revenue that is earned by these guest houses or the provision of this transportation would again be accrued to the government. The amount of for daily allowances outside Sikkim, the levels are again segregated between the state and union capitals and other places where the level 1 officials would be entitled to rupees 600 of ordinary DA in the state or UTs and 550 for the other places. Similarly, for level 2 is 550 and 500. For level 3 officials it's 500 and 450. For level 4 officials it's 400 and 350, and for level 5 officials it's 300 and 250. For DA charges inclusive of hotel accommodation, again the segregation is between state and union territory capitals and other places where level 1 official would be entitled to 3,000 rupees DNS allowance inclusive of hotel accommodation charges at the state capitals, and at other places the same DNS allowance inclusive of hotel accommodation would be 2,500. For level 2 officials it would be 25 and 2,000. For level 3 2,000 and 1,500. For level 5 1,800, and for level 5 officials it would be 800 and 600. For a stay in a hotel in Calcutta or Delhi or Siliguri, a certificate of non-availability of accommodation in SCCS Guest House, Calcutta, Sikkim House, New Delhi, or SNT Guest House, as the case may be, shall have to be obtained from the concerned guest house and shall accompany the claim. This rule does not apply to the class 3 and class 4 government employees. So wherever the official is claiming DA inclusive of hotel accommodations at such destinations, they are required to produce the certificate of non-availability of the rooms. For the amount of daily allowance admissible to a government servant who stays in a hotel shall be the amount admissible under the previous rule plus the lodging charges paid by the government to the hotel, which shall not exceed the amount as already given. For the time spent in the journey from the headquarters in Sikkim to the duty station outside Sikkim, the amount of daily allowance shall be admissible under from this the number of daily allowance for halt in a hotel will be deducted. The same number of daily allowance will then be calculated. So basically where the government official is traveling and then he is claiming the DNS allowance inclusive of hotel accommodation, the days where the hotel accommodation DA inclusive of hotel accommodation is claimed, the DNS allowance excluding the accommodation is given for the travel dates. Now the journey on tour. Approval of the tour programs and drawal of advances for tours within the state of Sikkim. So this is actually what has been clearly enunciated by the Sikkim Travelling Allowance Amendment Rules 2016. The Sikkim Travelling Allowance Amendment Rules 2016 has made a clear distinction between the authorities that that are competent to approve the tour programs. The tour programs of the head of the department shall be approved by the minister concerned. The tour program of all Gangtok stationed Group A officials shall be approved by the head of the department. All district heads of offices shall obtain their approval from the district collector, who is deemed to be their controlling officer. The tour program of all other officers and staff shall be approved by the head of department or the head of office under their charge. Now for the tours undertaken outside Sikkim, the tour program of the head of the department shall be approved by the Chief Minister through the Chief Secretary. All other officers shall obtain the approval of the tour program from the Minister concerned through the head of the department and head of office. Group C and Group D employees undertaking tour outside the state of Sikkim would have to get their tour approvals from the head of the departments through the head of office. Other general rules. The head of departments shall ensure that tours outside the state are kept to an absolute minimum. Greater efforts should be made to utilize the services of the Resident Commissioner, Sikkim House, New Delhi, who should be suitably briefed in advance so that he can represent the government of Sikkim. Officers who are not entitled to travel by air should plan their tour program well in advance so that they do not have any difficulty in obtaining railway reservations and last minute request for approval by air travel as special case is avoided. The period of tour should be kept to the absolute minimum, and each day to be spent outside the state should be fully justified in terms of specific tasks that need to be carried out and the necessity of the personal presence of the officer concerned. All claims of travelling allowance bill is required to have a certified photocopy of the approved tour program and a tour report duly approved by the head of the department. The tour reports of the secretaries, head of departments shall be approved by the chief secretary. Drawal of tour advances. The head of department, with the concurrence of the financial advisor of the department, sanction a temporary advance to the government servant drawing regular pay under his administrative control, who is required to proceed on tour including a prolonged tour in interior places which is difficult to access, and an advance to cover his personal travelling expense as well as his expenses on contingent charge arising out of the tour. The financial advisor and the drawing and disbursing officer shall take into account the following items of expenditure to determine the quantum of advance. Daily allowance as admissible as per Rule 28 and 29. This has already been discussed, the daily allowance within the state of Sikkim, outside the state of Sikkim, inclusive of DA, exclusive of DA. Airfare, railway fare, roadway fare as entitled under these rules. Room rent for stay in guest house within the state and Sikkim, New Delhi, Sikkim, Calcutta guest house and other state government and central government for the tour outside the state of Sikkim. Any contingent charge as per these rules. 75% of the estimated expenditure can be granted by way of advance. After granting the advance, it is the responsibility of the financial advisor as well as the drawing and disbursing officer to fully settle the bill. A second advance cannot be given to the same official unless the previous advance is settled, and the amount of advance granted should be adjusted immediately on completion of the tour or within 3 months. So if an advance has been granted by the office and the advance is not settled within 3 months, it is required that the advance earlier granted is adjusted from the pay of the officer or official who has taken the advance. The head of the department, head of office, drawing and disbursing officers shall indicate the details of outstanding advances against the government servant on transfer or on retirement or on quitting the government service in their last pay certificate in order to recover the amount of salary and allowance from the retirement benefits. So basically any unadjusted advance would be either adjusted at the next place of posting or from their pension. A government servant who has taken advances under these rules for any particular journeys shall not be paid travelling allowance or any other bills in their favour until the advance or any portion of it remains unadjusted. So it is not just the any subsequent travelling allowance that is declined to a hearing officer. It is the any other reimbursements or bills accruing to them that can be stopped, that need to be stopped actually. The headquarters of the government servant shall be in place, shall be prescribed by the government from time to time. A journey during probation period. A probationary officer appointed and who is required to proceed on tour for discharge of his duties and is drawing a consolidated training allowance for the first year of training, probation or apprenticeship shall be eligible to draw the travelling allowance and entitlements as admissible to the appropriate grade of employees to which he is appointed. In the said rules, Rule 54 of the entries relating thereto, the following: a government servant who is entitled to avail medical facilities under the Sikkim Services Medical Facility Rules is also eligible to avail travelling allowance for his family members as per the entitlement. The term family means family as defined in sub-rule 2 of the Sikkim Medical Facility Rules. For journey by air, for a government servant in receipt of grade of rupees 7,200, that is of the rank equivalent to joint secretary above, per month, shall be entitled to air travel. And finally, the travelling allowance for escorts. And escorts shall not be entitled to any travelling allowance under these rules. So that was the Sikkim Travelling Allowance Amendment Rules 2016. So basically we finished with the plan and non-plan merger, the Sikkim Travelling Allowance Amendment Rules, and we are left with the Sikkim Financial Rules. Now, as I said before, the Sikkim Financial Rules is a very broad topic which would require probably a lot of sessions to cover. So, I mean, we can go about two ways of a brief synopsis of the Sikkim Financial. We can either opt for the brief synopsis of the Sikkim Financial Rules, the important provisions, or we can go for discussions or whatever, however you would like. Is there anything that you have reservations about the Sikkim Financial Rules, something that we can discuss at this session here? Or should I go ahead with the synopsis of the Sikkim Financial Rules? Okay, so the synopsis it is then. I'll try to do justice to the Sikkim Financial Rules with whatever brief amount of time I'm left with. The powers of sanction. Are we carrying the Sikkim Financial Rules? Is anybody carrying the Sikkim Financial Rules? No. Okay, so I'll just try to explain with whatever help I can with the Sikkim Financial Rules. One of the basic requirements when we are making an expenditure would be the basic routine would be to get an approval. Once we get an approval, we get the approval signed on the sanction orders, and then we prepare the contingent bills and we send it to the pay and accounts office. One of the principal areas that we need to look for is the power of sanctions. As to every proposal, there is a certain power given to the higher authorities, and to see who is competent to approve a certain expenditure, we need to see the power of sanction. The power of sanction, briefly, the power of sanction, the financial powers of the government which have been delegated to a subordinate authority shall vest with the finance department. So as in the TA rules, wherever anything is unclear, if the Sikkim Financial Rules doesn't cover who is competent to approve a certain expenditure, the final authority to speak on the matter is the finance department. Besides this, the Sikkim Financial Rules explicitly has delegated the authority of sanctioning to the powers that be. There's something called the Appendix 3. Appendix 3 is divided into two parts. That is Part 1 and Part 2. When you turn to Appendix 3, Part 1 of the Appendix 3 segregates the powers between the secretary, that is the head of the department, and the head of the office. Again, against every item of expenditure, in the remarks column there is a description. Should there be any difference in interpretation? For example, for residential, non-residential buildings, rent for private buildings for the office accommodation or residence, that is for establishing the office, the secretary has full powers, head of office has full powers as well. For electricity, water charges, secretary has full powers, head of office has full powers as well. For municipal flat taxes of non-residential buildings, it's full powers to both the secretary and head of office. For petty repairs, secretary has powers up till 2 lakhs per annum, and the head of office has powers up till 50,000. Number 2, it's for the purchase and repairs of typewriters, duplicators, furnitures. So basically it's for the office accessories and accessories. Purchase and repairs of computers, photocopiers, all these. Secretary has full powers. Head of office has full powers to purchase of ordinary typewriters, duplicators and calculators. For purchase and repair of office furniture, fixtures, fittings, secretary has full powers, and the head of office has full powers only for repair of office furniture, fixtures and fittings. The powers of the head of department and the head of office are subject to the scale prescribed rates after inviting quotations from directives as may be issued by the government. For other items such as purchase of crockery, cutlery, the secretary has full powers. The head of office has powers up to the extent of rupees 5,000. For purchase of books, likewise full powers to the secretary and 5,000 to the head of office. For refreshments, it's up to 20,000 to the secretary and up to 2,000 to the head of office. For purchase of liveries, that is for the purchase of uniforms of the officials that are entitled to it, it's full powers to both the secretary as well as the head of office. For purchase of stationeries, again it is full powers subject to the purchase being made from the state cooperative. For local purchase in emergency cases, it's up to 10,000 to the head of department and 5,000 to head of office. Advertising charges, it's full pass to both the head of office and head of department, subject to the advertisement being routed through the Department of IPR. For printing works, it's full pass to both the secretary and head of office. Telephone charges, full pass, subject to the norms laid down and the restrictions as may be issued by the government from time to time. This does not include the cost of installation of a new telephone connection. Postage stamps is full pass to both head of departments as well as head of office. For survey instruments, it's full pass to the secretary, only to the secretary. For exhibition and fairs, it's full pass to both the head of department and head of office, subject to the participation having been approved by the government. For the charge of a legal expert and advocates, it's full pass to both the head of department and head of office, subject to the rates being certified by the law department. For remuneration for holding an examination, it's full pass to both head of department and head of office, subject to the norms and restrictions as imposed by the government. For staff paid from contingencies, it's full pass to the head of department, subject to the observation of the restrictions imposed on appointment of such staff as per the wage rates prescribed by the government from time to time. For scholarship and stipend, it's full pass to the secretary again. Freight is full pass to the head of department as well as head of office. For customs and excise duty, it's full pass to the head of department. Commission on postal memo orders, bank drafts and official purposes, full pass to both head of departments and head of office. For testing charges of materials in government recognized laboratories, is full pass to the head of department and head of office. For grants in aid to Zilla Panchayat, it's full pass to the head of department. Motor vehicle tax is full pass to the head of department. Sanction and advance to government servants under their control is full pass again to the head of office as well as the head of department, in accordance with the instructions and limit issued by the government from time to time. Now, whatever expenditure is not, whatever power, delegation of powers has not been clearly explained by Appendix Part 1 of the Appendix 3 is covered by Part 2 of the power of sanction. The Part 2 of the sanction of contingent expenditure has been laid down as such, where the revenue expenditure not covered by Part 1 up to the extent of rupees 1 lakh falls within the purview of the Secretary, Commissioner of Administrative Department, DGP. For the head of office, the expenditure is up to the extent of rupees 25,000. So for recurring expenditures, the limit that has been given by the Sikkim Financial Rules is 1 lakh for the head of department and 25,000 to the head of office. Recurring expenditure would be any expenditure that is of a routine nature that would crop up time and again. It's not a one-time expenditure. Basically, recurring is something that it becomes a committed liability on a routine basis. Non-recurring expenditure that is not covered under Part 1. For non-recurring expenditures not covered under Part 1, the power of sanctions would be up to 2 lakhs to the head of departments and 50,000 to the head of office. So any expenditure that is usually a one-time expenditure, the head of department can exercise his discretion up to the extent of rupees 2 lakhs, and the head of office can exercise his powers up to the extent of rupees 50,000. The power of sanction under Part 2 for the Chief Secretary is up to rupees 4 lakhs for recurring expenditure and rupees 7 lakhs for non-recurring expenditure. Appendix 3A pertains to the reimbursements, expenditures arising on account of the government vehicles. So there is basically a chart given where there is a ceiling limit given for each sort of a vehicle that forms part of the any expenditure arising on account of government vehicles can be referred to through Appendix 3A and the Schedule 1 under Appendix 3A. Next there is the Appendix 4. Now the Appendix 4 is actually a specific delegation of power of sanction. It gives the power of sanction to the particular departments. For horticulture and cash crops, for example, procurement of fertilizers, seeds, insecticides, planting materials, the secretary is vested with full powers. Similarly, for animal husbandry procurement, it's again the secretary with full powers. Similarly, as you can see, is for human resource department, there is something for healthcare department. This is something that is specific to the particular departments. For example, if it is healthcare department, the subjects under healthcare come such as X-ray films, oxygen tanks, bedding, linen, diet. For the transport department, it's procurement of petrol, spare parts. For police department, it's diet charges. For accused persons, hiring of private vehicles for carrying of dead bodies. For law and order duty. For commerce and industries, is payment of incentives to small scale industries. So basically that was the power of sanction, which is a very important subject when it comes to obtaining approvals, making expenditures on the contingent bills. Another important area of discussion would probably be the purchase of stores. It's constituted under Chapter 10 of the SFR. We can briefly go through the purchase of stores as well. Purchase of stores. Local purchase of stores would normally be when the requirement is immediate, when the requirement of such minor magnitude and no bulk purchase is required. So the purchase below 20,000 can be considered a local purchase that can be made on an immediate basis. Purchase should conform to the following procedure. In case of purchase costing less than 10,000 at any time, a reasonable market inquiry would suffice. For purchases above 10,000 and up to rupees 20,000, it should be through direct invitation of rates from reasonable number of firms. So this is where you get the quotations from at least 3 suppliers. You make a comparative statement and make the purchases. For purchases costing above 20,000, normally the purchases should be made through the State Trading Corporation of Sikkim. In exceptional cases and in cases of urgency, the purchases may be made with the specific prior approval of the Finance Department. The rules regulating purchase of stock materials and other items required by the Department of Government of Sikkim are contained in this chapter. The Rule 126 states that purchases exceeding 10,000 should normally be made through the State Trading Corporation of Sikkim. Procurement of goods and materials by all the line departments through STCS was emphasized by the Finance Department through the circular number 18 dated 29/9/1983. So, I mean, the gist of this would be purchase below 10,000 can be made locally. Between 10,000 and 20,000 should be made with at least the procurement of quotations. And usually for purchases above 10,000, it should be through the SCCS. For any purchases above 1 lakh rupees, it is required that the same should be done through advertisement in a local newspaper with at least 1 month's notice. So that would be about the purchase of stores. So we've gone through the purchase of stores, the power of sanctions. I think time only permits these two sections to be covered under the Sikkim Financial Rules 1979. I hope been a little help to, I hope I've done justice to me being sent here on the podium to enlighten your understanding. And I think the next resource person would be giving you a comprehensive tour of the General Provident Fund rules, the pension rules, since the senior AO deputed for the task is from the PGIF division himself. Right, so thank you very much.
Thank you.